All right. Hello, everyone, and thanks for continuing to join us throughout the day here at the Lytham Partners Spring 2024 Investor Conference. Again, my name is Robert Blum, Managing Partner of Lytham Partners, and joining us, I think, for a record third or fourth time here is is the Senior Research Analyst from Lake Street Capital Markets, Ben Klieve, who specializes in covering the agriculture sector. Ben, I'm always appreciative of the time that you give us and the insights that you have into the sector here today. So, we've got about 15 minutes. I want to jump right into it. Talk about some of the key trends right now that are sort of shaping ag and how they're impacting investment opportunities today.
Yeah, first of all, thanks for having me. It's great to be here. The key trends shaping ag today are the ag sector is really coming down off of a multi-year rally. Ag is a very cyclical business, and that cycle is now cooling off after a rally that started in late 2020 and really extended into kind of the middle of 2022, shortly after the Russian invasion of Ukraine. So really over the last 12 to 18 months, that rally has begun to cool and firmly now on the downside. The trends that you're seeing as a function of that cyclical change here are lower levels of net farm income as grain and oilseed prices are falling, input costs continue to rise. You have supply chains that are normalizing after a few years of real disruption, which has both positive and negative repercussions on the sector. Makes it more predictable, but at the same time, some of the support that disruption provided to pricing has started to cool. Weather dynamics are a persistent issue in the space. News of the day on that front is flooding in Brazil has caused a bit of a rally in soy prices over the last couple of weeks. Some of the impacts on investment opportunities. Any investment that has real concentration towards any of these individual trends or geographic exposure certainly has seen a more pronounced pressure on valuations than some of the more broadly diversified companies within the space, or those that are more isolated from these trends. So certainly there has been pressure of late on valuations in the space.
So considering a couple of things that you just mentioned, just general intermediate supply demand dynamics, maybe some of the geopolitical issues out there, and then maybe the longer term sort of global population dietary trends. Take those small, medium, maybe longer term trends into account. What's sort of the general outlook that you're seeing for commodity prices, and put them into maybe buckets if you could there?
So, I mean, over the long term, the general dietary trend is going to be that emerging countries, as they have increased per capita wealth, have greater desire to have better diets, and that supports the sector broadly. So that's a good long term driver. In the immediate term, regulatory pressures. Geopolitical dynamics are certainly a complication, particularly for companies that are exposed right now in the Middle East. We've seen several companies that have had kind of isolated pressure from disruptions in the region. That's going to continue on and off in perpetuity until somebody figures out how to solve for peace in the Middle East. So in the near term, it looks like there's kind of a bit of a variability depending on the geography or the crop that you're considering. Over the long term, I think there's broad support for long-term demand trends as supported by global population growth and dietary preferences. So a bit of a mixed bag in the immediate term, but over the long term, I think broadly supportive.
When we think about some of the government policies and some sort of sustainability initiatives, what has been the impact that you've seen here on the sector and some of the investment decisions that managers are making as a result of some of those initiatives and policies?
So in the U.S., there's a lot of chatter right now from in the federal side about a farm bill. There's not much to really talk about there, but that does capture a lot of headlines. So you may hear a lot about that in the news as it pertains to ag. I don't really think that there's much of a I don't think depending on the outcome of the state of the farm bill, there's going to be much change to the ag sector. The more pronounced impact that the federal government has as it pertains to the ag sector is around biofuel regulations. Right now, there's kind of an ongoing evolution of the biofuel industry beyond simply ethanol into next generation biofuels. The Treasury Department recently had some kind of indications that were a bit mixed around that evolution, but there's a big initiative coming out in 2025 called 45Z that is broadly supportive of the biofuel industry, but how supportive it is remains to be determined. That was a function of the IRA that came out of the executive department here over the last in a couple of years ago. Sustainability initiatives undergird really a lot of the federal policies that you see. Also, a lot of the state level policies as it pertains to biofuels, especially state level policies in the West Coast. Some policies around animal health and animal welfare as well. And then, also sustainability initiatives that really are coming from, call it if you want, consumer driven or corporate driven as a function of consumer demand. So you have a lot of focus of companies both in the ag sector and not in the ag sector for more kind of carbon smart, ecologically friendly farming practices. So companies that are broadly exposed to, novel inputs or novel production practices that support these next generation biofuels or sustainability efforts within the space, I think are pretty well positioned.
Fantastic. Talk about maybe some emerging technologies, some innovations within the sector that might be creating opportunities for investors.
Yeah, so a lot of those categories really hit on what I was just referring to. A lot of emerging technologies that really support kind of next generation inputs, next generation production practices, which broadly have environmental benefits in the form of enhanced carbon sequestration, reduced fertilizer pollution, enhanced nutrient density of crops, things of that nature. Companies that have technologies in those spaces are I think pretty compelling. Those technologies are really pretty isolated and not isolated, but the value proposition of smaller companies is more pronounced related to these kind of disruptive technologies, I think, than you have in the bigger, kind of more established companies that are more more commoditized at this point and just less nimble. Some of the specific products within this space, I would refer to biological chemicals. There's some next generation seeds coming out that have novel herbicide tolerant technologies or have enhanced oil content, greater nutrient density. There are smarter fertilizer products that I think are arguably the most disruptive, next generation input that basically allow plants to pull nitrogen out of the air rather than have to have a farmer spray it onto a field. There's also, a lot of talk about, autonomous machinery and, smarter precision application of crops from smarter machines. That's more concentrated in the larger companies in the machinery space. But throughout the rest of the space, you can see that value proposition in a pretty pronounced manner, I think, in many small companies as well.
When you think about sort of trying to mitigate risk, investment risk, even farming risk, et cetera, for some of these technologies that you're talking about, who's best positioned for growth there? What sort of technologies and applications might be best positioned for opportunities there for investors?
So, I think there's a lot of alpha potential within kind of certain, certain technologies that companies develop by some of these smaller companies. Mitigating risk are those companies that have, in my view, that have, really clearly defined commercial visibility in the form of partnerships. There's a real need in the ag sector for partnerships. Small companies cannot go at it alone. This is a deeply ingrained, kind of slow moving sector. And if you don't have commercial partnerships with some of the larger players, you're going to really struggle to get commercial adoption, no matter how good the science is of your legacy of your disruptive technology. And so the companies that have real commercial relationships, commercial chops, those are the ones that I think are going to best be able to mitigate risk. And then to the extent to which companies are exposed to those broader risks that we talked about at the start of this conversation around, weather dynamics, different pressures from a macro factor. The companies that are more exposed to those that are just more diversified, I think, are going to be less risky than those that have kind of concentrated risk.
All right. Maybe just sort of some closing thoughts or takeaways, maybe your general outlook for the next year, 2 years in the space.
Yeah, so I mean, the pressures facing the space over the next year or two are real. But at the same time, humans got to eat, and we got to fill our cars with gas. Some of that gas is increasingly shifting to biofuel-based sources, and a lot of the demand drivers that are have supported the industry for decades are continuing. Albeit with some challenges, especially as supply chain disruption is coming back down to earth. So in the next year or two, I think you're going to start to see some of these emerging technologies really begin to scale and really demonstrate the commercial viability that I think are embedded within the science. And then over the longer term, the companies that are really have pivoted that from a commercial potential today to a path to profitability, over the midterm, those are the ones that are going to really shine in my view. So I would tell investors to focus on companies that have differentiated technology, that have commercial relationships, and spread that risk out, across several companies within the space. And I think alpha generation is going to follow.
Fantastic. Well, to everyone listening, I hope you sort of understand the knowledge that this guy brings to the table from the ag space. Thank you for sharing some of that here with us today. Ben, if anyone wants to get a hold of you, how can they do that?
Yeah, sure thing. My email is first name dot last name ben.klieve at lakestreetcm.com.
Fantastic. Well, Ben, thank you so much for your time as always. Found it informational. Hope you can join us again during the next conference. But again, please reach out to Ben if you have any questions on the space. I think you'll certainly find his insights valuable to you guys going forward. So again, enjoy the conference, everyone. Ben, thanks again for your time today.
Thank you, Robert.